Comcast is set to report results Thursday before the opening bell. It's been a challenging quarter for the cable company, a failed merger with Time Warner Cable, and low ratings for NBC. This as it continues to see more customers cutting the cord and saying no to cable TV subscriptions. But despite these headwinds, the media and cable giant is expected to show double-digit profit growth for its 15th consecutive quarter. Joining us from his offices here in New York is Tuna Amobi, equity analyst at S&P Capital IQ. Tuna, what most forecasts are that they're going to beat on both the top and the bottom line. What are your expectations?
Well, I think that's exactly right. I think Comcast has been executing really well over the last several years, in fact. I think they're kind of in a reset mode right now, coming after the rejection of their proposed merger with Time Warner Cable. So what I expect to see is another quarter of strong growth in the cable division, driven by high-speed data and the penetration of bundled offerings. The commercial business is growing north of 20%. But perhaps even more importantly is the NBC Universal, which where the turnaround is taking strong hold. NBC has been firing on all cylinders, from the theme parks to the networks to the film studio. We think this is really going to be a very significant quarter for Comcast.
So the three most important things to watch in the report?
Well, first one is we think high-speed data growth, which last quarter for the first time in terms of number of subscribers became actually the largest business in terms of subscribers, overtaking the video business. So that's an important milestone for that business, which has been a major catalyst for the cable division. Secondly, we think that on the NBCU side, they've had some ratings issues at cable networks, which kind of slowed down that division a little bit. But overall, I think NBC has been well positioned. So we would look for any indication of deceleration in operating cash flow at NBC, which we don't expect, to be sure. So NBC should put together another strong quarter based on performance from the film studio, broadcast networks, and the theme parks. And then lastly, we look for the company to reaffirm its commitment to returning capital to shareholders. Last quarter, they announced an acceleration of their share buyback program, and they're on track to repurchase close to $7 billion this year in share buyback. So we'd look for any update in terms of the execution of that strategy.
Now, you mentioned the film division. Universal Pictures firing on all cylinders, it appears. Fast and Furious 7, Jurassic World, both doing extremely well. What sort of impact will these films have on the bottom line?
Well, I think the impact of film has been nothing short of phenomenal in terms of if you kind of go back to when they acquired that property, Comcast, from NBC. The film was been a drag on overall results for a very long period of time. So fast forward till today, the studio is on track to have the most profitable year in its history. I think that's extremely significant, and analysts haven't traditionally paid much attention in terms of the film studio overall, which is a relatively small portion of the overall company, but that is beginning to change thanks in large part to the development and creation of a very kind of a range of new franchises that should begin to add significantly to the bottom line across all platforms.
Now, you mentioned the cord-cutting trend, and as we see more people switching to broadband and giving up those cable subscriptions, will those two, or is the hope that those two kind of eventually balance each other out, that even though you're losing some of those cable subscribers, you're gaining some of those broadband subscribers?
Well, that's the biggest question every company is wrestling with right now, and frankly, I don't think there is any clear answer at this point. I think your question goes to the heart of the debate on the balance between traditional and new business models. And while you're trying to protect the cannibalization of the core business, you also try not to be left behind, to take advantage of the new ways of media consumption, the millennials, et cetera. So I think for Comcast, they've done a number of things to mitigate such threats from over-the-top platforms. Just recently, they came out with their own announcement of a streaming offering that's kind of targeted to millennials, kind of the idea of a more direct-to-consumer skinny bundle. So I think the realization is that the traditional pay TV bundle is fraying. So most companies are trying to repackage and rebundle into skinny packages to appeal to kind of a base of consumers out there and kind of help to mitigate the changes that we're seeing across the landscape.
Thanks, Tuna. We've been speaking with Tuna Amobi, S&P Capital IQ analyst from his offices here in New York. I'm Ruben Ramirez, and you're watching The Street.